This week, Hedera quietly dropped an announcement so big that most investors still don't understand what they're looking at. While people think Hedera is moving slow, the network is actually preparing for something much larger, a structural expansion that hints at massive institutional adoption. And the strangest part, they didn't reveal the names, only the framework, which raises one huge question. Who's coming next? If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. Everyone keeps staring at Hedera's price chart like it's some kind of heart monitor, waiting for it to suddenly jump and reassure them everything's okay. But anyone who's actually been paying attention knows something much bigger is happening underneath, something the average retail investor always misses until it's too late. Because while people complain that HBAR is moving sideways, Hedera is quietly rolling out one of its most important structural upgrades yet, a partnership expansion that fundamentally changes who gets to build on Hedera, how fast the ecosystem grows, and how many real-world organizations can step in without being slowed down by the exclusivity of council membership. And here's where most investors get it wrong. They think partnerships are just marketing. They think new categories like strategic partners and community partners are simply labels. But if you zoom out just a little, you'll notice something that should make every HBAR holder sit up straighter. Hedera isn't adding these partnership layers because they need hype. Hedera is doing it because the demand to integrate, build, and deploy on the network is increasing so fast, the old system couldn't keep up. This isn't speculation, this is structural preparation. And whenever a network starts reorganizing itself to handle more participants, more institutions, and more real-world use cases, it means one thing: the next growth phase is already forming. Most retail investors treat this like it's background noise, but this is the kind of foundational shift that becomes obvious only in hindsight when the price is already taken off. But let's break this down so you really see how big this is. Hedera's council has always been the crown jewel. Google, IBM, Dell, Standard Bank, Boeing, LG, ServiceNow, Ubisoft, the list looks like the sponsor banner of a global tech conference. These companies run nodes. They govern the network. They keep Hedera stable, secure, and enterprise ready. But up until now, that structure also created a bottleneck. Because yes, enterprises want Hedera's speed, its cost efficiency, its security, its regulatory alignment, its auditability, its sustainability, and its enterprise-grade track record. But not every organization is ready for full council membership. It's expensive, it's selective, it's long-term, and it's not built for early-stage innovators or mid-sized companies who still want direct access to the ecosystem. So Hedera just solved that with a single bold move. The new partner program is a second highway, one where enterprises, fintech, startups, developers, integrators, AI companies, tokenization leaders, supply chain operators, payments networks, and Web3 builders can now participate without needing council membership. Suddenly, the door is wider, the on-ramp is smoother, the time to integrate is faster, and that means the pace of adoption, which has already been accelerating, is about to speed up even more. By the way, if you want breakdowns like this every day, the kind of analysis that actually makes you smarter, not more confused, consider joining our YouTube membership. We go deeper, faster, and more clearly than anyone else. And if you're holding HBAR or researching this ecosystem seriously, the insights alone will upgrade how you invest and how you think. Now let's keep going, because here's where everything gets interesting. Hedera didn't just announce vague categories, they revealed the internal structure, they revealed the benefits. They revealed the incentives, and if you read between the lines, the message is unmistakable. Hedera is preparing for a massive influx of real-world participants. Strategic partners get access to workshops, technical support, cross-industry working groups, direct council networking, co-branded opportunities, and early access to ecosystem events. Community partners, the hungry builders who are still small today but could be giants tomorrow, get the same working group access, the same networking, the same ecosystem integration, but tailored to early stage needs. This matters because networks don't create programs like this unless they know demand is coming, unless they know companies are lining up, unless they know the next cycle of enterprise adoption is imminent. And here's the truth most investors refuse to acknowledge. Enterprise adoption doesn't start with price, it starts with structure. It starts with governance, it starts with access. Hedera isn't reacting, it's preparing. That's why this program exists, because Hedera knows what's coming long before retail does. And if you're watching closely, you can feel it. The ecosystem isn't expanding accidentally, it's expanding intentionally. The foundation is done, the runway is built, now they're opening the gates. Here's where people start nodding along, thinking they understand what Hedera is doing, but they really don't. Because the partnerships Hedera is announcing aren't just nice collaborations or good exposure, they're structural integrations. They're long-term corridors being carved into global industries where Hedera becomes the hidden engine behind processes billions of people rely on without even realizing it. And the wildest part, most investors don't see the significance because these announcements don't come with fireworks. They come with quiet corporate language that looks boring until you actually understand what it means. Hedera's new partnership program is a perfect example. On the surface, it looks like a simple expansion of ecosystem participation. In reality, it's an entirely new pipeline for onboarding enterprise-grade builders, fintechs, Web3 companies, system integrators, and global organizations into Hedera without requiring full council membership. That's massive. Council membership is exclusive, expensive, slow to rotate. But this is the on-ramp for the next 100 companies that want early access to Hedera's infrastructure, support, technical resources, and council-level networking without the years of qualification. This is Hedera quietly multiplying its influence. Look at the two categories, strategic partners and community partners. Strategic partners are the heavy hitters, fintech companies, enterprise solution providers, large associations, industry networks. These aren't hobby projects. These are companies that already serve tens of thousands of clients and have the budgets to deploy real-world implementations. They get access to Hedera working groups, privileged sessions, technical support, and most importantly, direct networking with council members like Google, IBM, Dell, Boeing, LG, Standard Bank, and more. People underestimate how powerful that is. If you're a rising fintech or an enterprise SaaS platform, one meeting with IBM or Google can change the course of your entire company. Hedera is now the bridge, and that means every conversation that happens through that bridge increases the probability of Hedera-based deployments. Now, look at the community partners category. These are the startups, the innovators, the builders, the scrappy teams with high-impact ideas but limited resources. Address is essentially telling them, we'll give you tools, access, support, and a seat at the table. And when you combine those two layers, you start seeing the vision. Hedera isn't waiting for enterprise adoption to trickle in. It's actively creating infrastructure that pulls it in. Because when you create a structured, tiered partnership system, suddenly dozens of organizations can begin experimenting, deploying, and scaling on Hedera simultaneously. And there's a detail most people missed. Both partner tiers receive access to working groups with council members. That means the same brains responsible for enterprise-grade deployments are now in constant conversation with new builders entering the ecosystem. Knowledge sharing, technical alignment, code development. This is how ecosystems explode. Not overnight, not through hype cycles, but through coordinated structure. Add to that the real-world deployments already happening like Aberdeen, Arcax, Lloyds, Shinhan Bank, Standard Bank, Neuron World, Australia Payments Plus, Accenture, Nvidia, Intel, Mandela's International, and more, and you start seeing something bigger. Hedera isn't building a blockchain ecosystem. Hedera is assembling a global enterprise network. And this is exactly why the market keeps underestimating it. While other chains compete for meme coins, hype, and TVL spikes, Hedera is quietly solving decades-old enterprise problems. Compliance, tokenization, liquidity, supply chain transparency, cross-border payments, ESG reporting, AI verification, and digital trust. And here's the twist, every one of those industries is expected to scale massively in the next decade. AI is projected to reach $2 trillion, 0 cents. Real-world asset tokenization could exceed $30 trillion, 0 cents. ESG compliance is becoming mandatory. Cross-border payments are being redesigned. Digital identity is becoming foundational. Machine-to-machine commerce is inevitable. And when these industries need a ledger that can handle speed, finality, low cost, regulatory trust, uptime, and enterprise-grade security, there are not many options. But Hedera is sitting in the perfect position. What people miss is the compounding effect. Hedera doesn't need one partnership to blow up. It is $6 billion. It needs 100 medium-sized partnerships quietly deploying over the next 5 years. Enterprise adoption isn't fast, but when it clicks, it snowballs. Think of it like building a skyscraper. Everyone complains when they only see the hole in the ground, but when the foundation is done, suddenly the floors rise shockingly fast. Hedera is pouring foundation, concrete, steel, infrastructure, and while traders complain about sideways price action, the ecosystem is expanding horizontally so that later it can explode vertically. Most investors will realize it too late, but you're here early. You're seeing the blueprint long before the rest of the market understands what's being built. Here's the part almost everyone misses, and ironically, it's the part that determines whether Hedera becomes one of the most dominant networks of the next decade. People get so focused on the day-to-day price action that they miss the tectonic plates shifting underneath. Because right now, something bigger is happening. Hedera isn't just adding features, partners, or updates, it's building a multi-layered global infrastructure stack, and every new announcement is another bolt tightened into a machine the traditional finance world didn't even see coming until it was already humming. Look at the pattern. We aren't seeing random news. We're seeing enterprise dominoes falling in sequence. When PwC, one of the biggest consulting and compliance powerhouses on the planet, launches Hedera-powered ESG reporting tools, that's not a casual partnership. That's a global compliance machine plugging into HBAR. Companies don't experiment with ESG reporting. They're forced by law to comply. That means onboarding, that means usage, that means transactions. That means demand. And the moment big firms realize they can anchor verifiable, tamper-proof data to Hedera instantly and cheaply, they won't go back. Then you add wrapped Bitcoin on Hedera through BitGo, the largest institutional custodian in crypto. That's not a side feature. That's liquidity. That's cross-network interoperability. That's Bitcoin, the biggest asset in the entire ecosystem, now bridgeable, tradable, and deployable on Hedera's rails. And when institutions see they can move wrapped BTC on a network that settles in seconds, costs a fraction of a cent, never goes down, never congests, and doesn't explode with MEV games, they'll naturally start routing transactions through the network that works. That network is Hedera, and then you look at the AI integrations. The world is racing toward autonomous digital agents, AI models that can transact, audit, execute trades, manage workflows, and interact with on-chain data. Hedera just launched the Hashgraph MCP integration, which essentially gives AI direct access to live Hedera network data. Think about that. A future where AI systems check balances, verify transactions, trigger automated payments, log supply chain events, or audit carbon credits, all without humans. That's not theoretical anymore. The door is open. Hedera is positioning itself as the backbone for machine-to-machine economies, and those economies will explode in the next 5 years. But here's where the real shift is happening. Hedera's council didn't just grow, it evolved. The new Strategic Partners and Community Partners program is the first major step toward expanding influence and participation beyond the core 30-plus governing council giants. This is Hedera quietly onboarding the next generation of enterprises that want in but weren't ready or eligible for council membership. In other words, Hedera is preparing for scale. Not thousands of users, millions. Not dozens of partners, hundreds. Not a few isolated use cases. Full ecosystems. Finance, supply chain, AI, tokenization, loyalty systems, sustainability data, and more. And when you stitch these pieces together, you see the picture clearly. Hedera is not being built to be a crypto project. It's being built to be infrastructure. The same way nobody thinks about how Visa authorizes a payment or how AWS routes data for Netflix, people won't even realize they're using Hedera. It'll be under the hood everywhere. That's why the ETFs matter more than people realize. The Canary ETF isn't simply doing well. It's already locking nearly 1% of total supply, something that took Bitcoin ETFs years to accomplish with far larger market caps. And when larger issuers come in, WisdomTree, Bitwise, Grayscale, BlackRock, Fidelity, the supply shock becomes unavoidable. And remember, ETFs are just one doorway. Retail buyers, DeFi liquidity pools, AI agents, enterprise on-chain activity, tokenized assets, and cross-border settlement systems are all chipping away at the available supply. Quietly, consistently, daily. This is why the price isn't reacting yet. The system is still loading. Hedera is still absorbing partnerships, still onboarding institutions, still expanding infrastructure, still integrating with AI, still connecting real-world assets, still building liquidity routes, still distributing tools and APIs. Still growing the developer base, still strengthening the council, and while the market sleeps, Hedera is tightening every bolt for the moment adoption accelerates. Because when it does, it won't be gradual, it'll be sudden, violent, inevitable. The type of move where latecomers try to reverse engineer the moment they should have known, while early holders simply nod because they watched all of this happening long before the price chart caught up. Hedera is not waiting for the crypto market, it's preparing for the real world. And that's what everyone is missing.